We've actually just heard news out that came through today with regards to First Rand saying that it's not going to be embarking on any greenfield projects, and it seems that the CEO, Sizwe Nkasana, is alluding to the fact that we could actually see the company taking advantage of consolidation within the Nigerian sector. Are we going to see this kind of trend being stronger and aggressively pushed by most banks?
Yeah, I think it's a good question. Nigeria has probably come out with one of the most painful banking crises after about sort of $16 billion being injected into banks. It's been a painful period, and I think what's important is how do they move ahead and sort of infuse more confidence into the banking sector. Banks certainly now are capitalized. The banks that were undercapitalized or who had bad, non-performing loans have been nationalized, and now that the consolidation in the sector is now come to the fore and approved by shareholders, I think within the banking sector there poses quite a bit of opportunities. If you just recall, the Nigerian banking sector shrunk by almost 76%. So there's certainly a considerable amount of value in the banking sector, which probably will open up the market to a number of competitors.
Is the risk completely out? Because we know non-performing loans, and you mentioned it, basically the average has now dropped to around 5%. But the truth of the matter is where the problem really lies is risky banking. So, the likes of retail investing versus institutional investing and, of course, investment banking. Do we need to see a clear separation between the two?
Well, I think Governor Sanusi has definitely started that process, because it's absolutely important that investors have confidence within the banking sector. So we're seeing more regulation, we're seeing more regulations and laws being enforced to enforce the sort of non-performing loans, and I think AMCON has certainly played a role in terms of mopping up these bad assets. But certainly I think it's up to banks, and it's up to the management of those banks to ensure that we don't have a banking crisis that we've seen in the past. And I think certainly in terms of looking at granularities in their portfolio, in terms of looking at strengthening their risk management, and a number of banks have already started to do so, I think it will play a very, very important role in terms of ensuring that the banking sector remains in a healthy state.
And of course, AMCON has actually done quite a bit of progress with regards to the mergers of some of the weaker banks. We know that it is offering opportunity, but the Bank Directors Association of Nigeria actually came out with a very interesting piece called The Future of Banking in Nigeria, and also spoke of the roles of directors going forward, and that really where the true possibilities lie. Would you agree with that? Yes,
absolutely. I think certainly Governor Sanusi, as well as the regulators, have now put in place a 12-year tenure for non-executive directors, as well as a 10-year tenure for sort of the senior executives, including managing directors of banks. You need to have some succession, and I think you need to also have clearly competent management as well as non-executive directors on the board to act as an oversight, which will infuse confidence. And I think certainly the banks have gone a long way in terms of getting a new breed of management, getting the top management realigned in terms of the sort of gearing up Nigeria for banking growth.
And at the end of the day, in hindsight, when you actually look back at what really created the drama in Nigerian's banking sector, was the exposure to margin loans.
Well, it was margin loans partly, yes, and partly to sort of very risky sectors or high concentration in terms of real estate as well as the oil and gas sectors. So banks need to clearly look at diversifying their portfolios. They can't look at just concentrating in the oil and gas or in the real estate or any sort of concentrated sector per se. They need to look at diversification,
and perhaps more on the consumer.
Absolutely.
Perhaps.
Well, I think, as you know, 9% of the Nigerians are actually banked, between 9 and 10%. So there's a significant amount of opportunities for the Nigerian banking sector to go into the retail space.
With regards to cash limits, and of course we know that there is going to be a policy, and in a sense that really relates to gearing the gap between the lending of the banks and the deposit rates. And that's really what needs to be focused on. And I suppose when you start banking more and more people in Nigeria, deposits will go up, and so too will lending.
Well, it's been very happy times for banks. I mean, they've been attracting deposits at fairly low rates, and as you know, the lending rates in Nigeria have been consistently high. There's been a significant gap, and as you know, in the news recently, there has been quite a bit of vocality around getting those depositor interest rates high. So we'll probably see that margins will start to squeeze in Nigeria. But I think also the more that banks expand their branch networks, the more they'll attract deposits, the more liquidity we see coming into the system, which will allow for perhaps more lending into that particular sector.
And it's quite an interesting banking environment, because there are so many banks, and of course we know that ensuring that you've got the right infrastructure in place and ensuring your costs stay low is also very much a challenge. Which banks are looking attractive right now?
Well, I think certainly I can't comment on the attractiveness of bank, but I can certainly comment on the acquisition. I mean, if you look at Access and Intercontinental, seems to be a great fit. Access has now acquired a wide branch network to actually attract low-cost deposits. If you look at EcoBank's consolidation with Oceanic, another key play in terms, and I certainly think that.
Which bank are you most bullish on?
I'm most bullish on the Access Intercontinental acquisition. I must say though that both EcoBank and Oceanic also represents key opportunities, FCMB and FinBank, so I'm not going to specifically go on either of those targets.
We'll take you to task for it. Do you think formidable forces for the likes of First Bank, which of course is a very big player in Nigeria, which banks do you think are going to be shaken with regards to market share?
Well, I think what certainly is going to happen is innovation is going to play a leading role in terms of shaping the Nigerian banking sector there. Having come back just from Nigeria, I think most banks are gearing themselves up to bring about innovative banking products. They're employing quite a bit of international expertise in terms of looking at their current product range. So I would say that it's going to be a really exciting time for the Nigerian banking sector over the next 2 years. Great.